Check. Check. Oh, that was painful. Freaking Zoom. Welcome in, everybody. Had some Zoom setup issues as usual, so sorry I'm a little bit late, but here we are. Bobby, Mr. Shake and Bake himself, good to have you. Should be a little fun one for us tonight. Let's see how many people we get rolling in. Adam, good to have you. Seen your comments and your posts on gains tab too, so glad to see that success, man, paying off for you. Would to say that publicly, man. Good for you. It's awesome to see people succeeding. 11 people. Come on, guys. I'm not going to talk about CPI forever. 11 people. That's all we got. Promise we'll chart at the end. But yeah, we'll let them roll in a little bit. Anybody hit a really cool trade today? Anything? Yeah, what is up with these Zoom windows? Oh, now I lost the chat. There we go. BAC. Ooh, viral. Let's look at that really quick because we got a little bit of time. We'll make time. I'm sure Arena's in here too. She was looking at this one too. Nice one. Man, that was a nice another day mover. Curl up over that 20 moving average. That hourly 20 we all use. It's a nice trade. 325. Damn. That must either caught the bottom or you've been in for a while. That's nice though. That's a great trade. All right, well, we got 18 people. Hold on one second, guys. All right, guys, special guest. We got Tilio joined us from the pickleball courts. He's on my phone. So I kind of messaged him today, asked him kind of, the route I should take on this lecture and stuff. So he kind of gave me some guidance, but he also would take some time out of his night to stop in as well. So I got him on speakerphone on my phone through the Discord, the Zoom app on my computer. So hopefully it works. But yeah, you guys that are in here, hopefully you learned something. Go ahead, Till, if you got anything to add.
Yeah, no, I guess can they hear me good? Is this gonna work or
Anyone in the chat? Yes or no? Can you hear him? Nice, sounds good, they said.
all right. Yeah, and if I pause at all, it's just because I'm driving. But yeah, I mean you're doing more of a kind of current market lecture, right? You mentioned.
Yeah, I wanted to kind of just touch on CPI, PPI a little bit, and more so like, that we've talked about, or other people talked about, like buy the dips when it makes sense. Don't be bearish just because you read something on Twitter, but be short-term bearish on dips that are dipping when it makes sense or when the data tells us to, basically. But kind of just wanted a summary on all the data we got last week and with the Fed stuff. If you want to touch on that a little bit.
Yeah, and of course, and things could change tomorrow. I mean, you basically got the bellwether of the AI trade, NVIDIA reporting. So even though they might not have no direct correlation to other companies' earnings, it is going to give an overall sentiment, and we can see what happens when sentiment turns quick. Just the swing move we had lower a couple of weeks ago. I mean, that's everyone gets bearish. Even you go on watch CNBC or Fox Business, and the sentiment is a big driver. And since then, you've still had equity outflow, surprisingly, even though we're up near all-time highs again. I mean, there's been money pulled out to the sideline, so that's why tomorrow is going to be a big event. PPI, CPI, the first couple of reads in the beginning of the month, that's seasonality. That's why it was kind of expected that there's a good chance we're going to get some higher readings. That's when businesses all kind of up their prices. Usually they do it in the beginning of the year, and then that trickles down to the vendors, and then the vendors raise their prices. So that's why going into March, April, you might get some higher reads. And obviously we're at a point right now where it's more so sticky, but I mean, from 9% in 2022 to where we're at right now, 3.4, whatever it is, that's pretty good. So, and we keep hearing out of the Fed, even though you're going to continue to hear more pessimistic talks as far as when rate cuts are coming. I mean, they're going to do that. They're not going to come out and say we're going to cut rates. That would kind of undermine their entire strategy of trying to keep calm markets. They come out and say that we rally, and the market is a wealth creator. So it's been on a big run. 401ks are doing good. Retirement accounts are doing good. Money gets pulled out that way. You got money to spend that can cause inflation. So until they know they're going to cut, they're not going to say anything. They're going to keep talking down on the rate cuts. But even Powell last Tuesday in Amsterdam with that hot PPI report. I mean, the PPI report was hot, but the March number was revised lower from 0.4 to 0.1, or negative 0.1, actually, I think. So, what's that to say about this next revision? April could end up being revised lower too. So that's why we had that sell off early pre-market there, quickly bought back up. And then CPI obviously came in cooler. So, and that's why I didn't go into much detail on the newsletter on the inflation reports, because right now we're kind of in that just choppy period where it's not, they matter in some sense, but where there's no detrimental impact that we have with these numbers that we're getting. So the Fed ain't going to make a decision. In fact, a couple of the Fed speakers we had this week, one today, I think said it's going to take a few more months of good data before they even have any idea on rate cuts. But there's no point to cut right now anyway. So that's a tailwind in my eyes for the market. As far as peak rates in this cycle. Now, of course, we could come into the issue where the labor market starts to deteriorate. They don't cut, and then we're maybe looking at a hard landing induced by the Fed. So I don't think that's going to happen. But so that's a tailwind for the market right now, I think. We're not going to see any more rate hikes, so that's good. Earnings this season have been good. I don't have the exact numbers since I'm not at my computer right now, but you're going to see upward revisions for the rest of the year. So S&P earnings outlooks are going to get revised higher. That gives the justification that we can trade higher and have that higher multiple on the S&P. And then same with the companies reporting too. I mean, most companies that matter, that have a good weighting in the index, have all raised their Q2 outlook and full year outlook. So that's another way right there. When they raise their outlook, the stock actually gets cheaper based on the forward multiple and the numbers that they gave us. So I would say that's a tailwind too. Those two things are really the big things, growth and inflation. So we had that issue a few GDP reports ago where growth was a big miss. I think like 2 basis points below expectations. And then we had the inflationary prices out of that GDP report too that came in higher. So then you're looking at people fearing stagflation. But if inflation, even if it stays the same and earnings are growing, we're not going to have stagflation. But right now between those two, I would say earnings is the biggest risk for the rest of this year. If we do start to see the consumer kind of cut back a little bit, and then we just had all these upward revisions and they revise them lower, that's where I could say if we're going to have any risk, it's not going to be an upside risk to inflation. It'll be a downside risk to earnings. But right now, for an economy like ours that is still growing on the surface, that's when you're going to get that foreign money coming into the markets. That's why you might want to look at China right now too. I'm not sure how good their economy is right now, but if they've kind of bottomed, and I know the Chinese Communist Party is, giving out a lot of stimulus to kind of prop up their markets, that could be a place to look. Emerging markets, if we start to see growth kind of accelerate there too, that could be a place to look. But those are two tailwinds in my eyes: inflation and earnings for now. That could always change. NVIDIA reporting tomorrow. That's really the last thing I had to talk about, because if you look at the SPX, we haven't done much this week. We're kind of consolidating, and that makes sense ahead of NVIDIA's report. So that's going to be the next catalyst that takes us higher. It's about a 5% weighting in SPX. So it doesn't seem like a big weighting, but like I said, it's a bellwether of the AI trade. So you're going to see all the kind of comparables trade based off of that too, and tech in general. And as far as the earnings go, I would be extremely shocked if we don't see another beat and raise. But it's trading into all-time highs. It's been consolidated for about 2 months now. Expectations are extremely high. Everyone's expecting that beat and raise because Microsoft, Amazon, Google, and Meta, 40% of their revenues from their earnings reports, we heard that I think it was 175 billion. They're increasing their 2024 AI spend on cloud and infrastructure. So a good chunk of that obviously has to start with NVIDIA. They're going to get a piece of that pie. So that's one reason to think this is going to be a good report. And worldwide, global spend on AI for 2024 is supposed to be about 225 billion. So you can see the money kind of flushing around there, and a lot of it starts with the powerhouse right now, which is those GPUs, and that's what NVIDIA has. And they're coming out with the Blackwell GPU, which is going to be more powerful and more expensive. And you saw it trade down this morning based off of that Amazon report, which didn't really make a lot of sense. And I don't even know if it was confirmed, that report, but they were going to stop orders of the Hopper, their old GPU, because they're waiting to upgrade to the Blackwell. That's kind of what you want to see. You want to see that these companies that just invested tens of billions of dollars, especially Meta, I forget how much that was, but buying up a lot of those Hopper GPUs from NVIDIA, you want to see that they're going to upgrade now to the Blackwell, the more powerful and more expensive. That's going to continue to drive NVIDIA earnings growth. TSM as well, they supply the chips. They keep raising their outlook. They wouldn't raise their outlook. They raised their outlook because of AI, even though it's only about 14%, I think, of TSM's revenue is the AI chips. But if they're doing that, obviously they're getting a lot of demand from NVIDIA. So I think the report's going to be great. NVIDIA still trades, I think, like 15% below its 5-year average forward multiple. So you look at the stock price, and you might say, oh, it's expensive, but it's really not. It's kind of trading at the same forward multiple based off these earnings when it was a few years ago at $100. But expectations are high. Everyone's looking for the big beat and raise. It kind of makes you wonder what's all priced in. But I think regardless, it's a win-win scenario. If you don't have exposure to NVIDIA and it does trade down for some reason on the report, which we've seen before too, usually during Q3, they put up these big beat and raises and trade lower for no reason. And that's a great buying opportunity there too. But this is obviously going to be the catalyst for the broader market in general. The rest of this week, it's going to re-accelerate that AI trade. So I think it's going to be a great report. I'm not saying playing the earnings is the move, though. I think you should have exposure to NVIDIA. They're pricing in like an 8.2% move. And then, of course, you got, if you want to look at other ways to trade it, of course, with maybe a little lower IB, SMCI, that's the 1.4 beta compared to the index. So that's a more volatile way to trade it. You can look at AMD. I'm sure that beta is a little lower. Beta is basically just how much it'll move compared to the index, how much the index moves. So, but NVIDIA obviously is always pricey, and I don't see that it's worth the risk to trade it to the upside unless you put on some sort of spread or just, I think you can comfortably start a position here too in some shares. If they get beat down, say 10 to 15%, likely they're going to get beat down on a big beat and raise when it shouldn't trade lower. So that's a gift to buy some more there too. But yeah, I think it's going to be a good report based off what we heard out of 40% of the revenues out of TSMC. Then you always have in the background too a stock split that will eventually come. Jensen likes stock splits. A few weeks ago, he mentioned they're beneficial to his employees. I kind of think he's going to save a stock split for any time that they're going to have good numbers, but maybe not phenomenal numbers. Something to kind of take a little brunt off of the downside move the stock could make. But hell, if that comes this report, that thing will easily be over probably $1,200 by the end of the week. I'm not saying that'll happen, but so that's where we're at right now. Earnings are growing. Inflation, even though it's sticky, it's not accelerating higher. I think we're at the end of the Fed rate hike cycle. I think obviously cuts are definitely going to come before any more hikes. I think that's a 99.9% guarantee. We see how NVIDIA reports tomorrow, and that'll be that next leg higher. I think SPX, I got 53.45 to 53.50 is the first target. Then we got about another, I think 53.45. You can put on a strangle if you want, or just an at-the-money straddle if you really want exposure to the NVIDIA trade. But that's kind of, at this point, you're going into that blind, even though it should be a great quarter. But I think you're going to have a 90% better chance of waiting for the report, seeing what we get, how the market reacts, and making money that way. You're obviously going to have to pay a premium to chase the move a little bit, but you're going to get that continuation guaranteed. Other than that, we've kind of been chopping around. Like I said, that's worked off these overbought conditions a little bit. I'm not sure where we're at right now on that proprietary indicator, but we're at a point where I think a lot of the bad news is behind us. Now, I'm not saying things can change. We can't trade lower. Obviously, there's still geopolitical risk, a whole bunch of fiscal spending that's being thrown around out there. But right now, things, I would say, look good, more so for the bull case than they do the bear case. So as far as buying dips, kind of like what I put on the newsletter there, you can throw up some retracements from the prior swings that we've had. Usually anywhere from that 50% retrace to the 38% retrace is a good buying opportunity. But like I said, this could all change tomorrow. For the 1% chance that NVIDIA just puts up some terrible numbers, that's going to let a lot of air out of the broader market. Tech would probably be a no touch for a while. So things could definitely change. I don't foresee that happening, but that's kind of where I think we're at right now, is to remain kind of cautiously bullish, still react to the data because that's what the Fed is doing. But things look good, and I don't think any economist 2 years ago, 2 years ago could have predicted things go this way, where we don't have a hard landing. When inflation was at 9%, and the Fed started aggressively hiking rates. So the consumer's been holding up, and that's really because since 08, 09, the amount of money that's been thrown at the economy, and especially during COVID, the consumer's in a good space right now for the most part. Like I said, over $6 trillion in money market funds right now. So there's money on the sidelines. The past 4 weeks, they've been pulling out money, even though we're chugging higher. So NVIDIA could accelerate that tech trade higher. But that's really what I'm waiting on. I'm not going to trade NVIDIA. I got stock still there. Just my core position. I would like to add to it, but I'm only going to add to it if it's another great quarter and they dip lower. But I think the 1000s is much more likely to come before, below 800. But we'll see. So that's the camp I'm in. Things could change. Definitely, yeah. Stay off the social media. The fear mongering, that's kind of what drives engagement. So the moves lower that we've seen over the past couple of weeks, I think, were justified. The market kind of got a little ahead of itself, but it got ahead of itself based off the expectations of rate cuts coming sooner. And right now, if you look at it, we're trading at 52-week highs, but the Fed and the market is kind of matched up as far as the outlook for this year and the amount of rate cuts, I think 1 to 2. So that's kind of what you want. We went from 6 to 7 rate cuts in 2024. The market was expecting and pricing in, down to 1 to 2, and things are chugging higher. So
real quick on that, I don't mean to cut you off, Tilly, on that thought. Just looking at the projections right now, and obviously June is 94% hold on rates, July 73, and then September is the first one where it's like, it's a split, kind of a 50% split. So yeah.
Yep, September I think is, and before I believe it was pushed back further. I think it was the last CPI report that they kind of priced back in September as a possibility, but I don't think you really care much about that. I mean, at the end of the day, you got to look at the bigger picture. And right now, with the federal funds rate where it is, they haven't broken anything. Surprisingly, I mean, of course that could change, but the market is sustaining these higher rates, and the Fed still expects there to possibly be some lags in the pipeline, kind of some air to be left out. But even if we don't get those rate cuts, they're slowing the pace of their balance sheet runoff, so that's going to add some more liquidity into the bond market, and that's essentially, I don't want to say it's quantitative easing, but it's reducing the quantitative tightening a little bit. So that's a little bullish, I would say, even if we don't get a rate cut. It basically is a 25 to 50 basis point rate cut in and of itself. And on top of that, you got the government that's still spending money. I mean, and of course that can be concerned too, all this fiscal spending, but right now a lot of that money, the Inflation Reduction Act, I don't think that's really made its full course through the economy yet, and kind of all the infrastructure building and everything like that. So that could still be a trade there in some of those things. But I think unless something breaks, unless geopolitically speaking something happens, you have every reason right now to be a little bit more overweight, I would say, in your portfolio than underweight. Obviously, you always want some cash just in case. But I think you don't want to be underweight equities right now, because I think ultimately you're going to chase them higher into year end. Even though May is typically the quote unquote sell in May, go away. I'm not sure we're going to see that. Of course, that can change tomorrow, but every kind of seasonal bias that's been thrown at the market so far this year, it's kind of done the opposite of. So you can look at that as even more bullish too. Election year, of course, going into the November elections, depending on how the probabilities look, you got really the two opponents are going to keep on spending money, which that's just kind of kicking the can down the road long term. The debt to GDP right now of a third world country, but unfortunately, it is kind of free money in a sense. So the only benefit you'll get as far as Trump versus Biden, they're both going to spend money, but Biden wants to raise taxes, obviously. Once the Trump tax cuts kind of expire, I think in 2025, Trump would kind of extend them. So, that could be one thing to look forward to. But no, near term, it's all about NVIDIA and what we get there, and the continued solidifying that the whole AI phenomenon right now isn't a bubble. There's actually companies that are earning, but of course we'll see. A lot of money, like I said, globally, 225 billion this year being thrown towards AI, 177 of which comes from four of the Mag 7 names: Amazon, Google, Microsoft, and Meta. So obviously you want to see it kind of pan out, because we've seen what can happen before. If you look at Meta, for example, with the whole metaverse and the amount of money that they dump there, Reality Labs, and the losses they're taking. So that could be ugly if it doesn't work out. But we've been seeing it. The productivity increases, which correlates into better margins. It's right now the whole AI thing is kind of correlating with better earnings. So, but yeah, as of right now, we're kind of all, I would say, in a better position sitting on our hands until we see the numbers we get out of NVIDIA, and going from there. So obviously I'll be around in the Discord tomorrow after hours, and we can break it down. And like I said, best case scenario, they have a significant move lower on great numbers, and that's going to be a dip to buy. We've seen it before. Hell, we saw it last earnings too. They dipped down to I think they dropped like $75 briefly before rallying. I don't know, 10-15%, something like that, the next 2 days. So, but yeah, that's kind of where we're at right now. Is just like the market chopping around right now and waiting. We should be in the same boat, so we shouldn't get ahead of ourselves and try and predict. It'll be much better to pay the premium and react and get that continuation move.
Yeah, I was kind of taking some notes on that, 8 to 10% hypothetical dip on NVIDIA. It's right into that kind of nice volume shelf, you probably don't have charts open, but 880-ish zone. And then like worst case scenario or worst case, fear down to that 823. But yeah, that dip down to the 880-ish would be near the 20 moving average on the daily too. So, chart wise, that could line up really nice for a dip buy for somebody.
Yeah, and I will say that now, of course, if they really miss the mark, or whatever it may be, then it's a different story. But
it'd have to be something to like just spook them, right? They'd have to backtrack on maybe something they said, or
yeah, but we've seen it before. But even though that was 4 to 5 quarters ago, I think they didn't really believe in the growth story there, or the new growth story, I should say. And that's when I did that first newsletter, the right up there. I think it was trading at like 450 or so, and it just kept getting cheaper and cheaper. Looking at the full year 24, full year 25, trading down to I think like a 26 forward PE. It's maybe at like a 35 right now. But if it drops for no reason, great numbers. Like I said, the amount of money on the sidelines right now, I think Wall Street is finally at the point where those that have been underweight NVIDIA are going to rush in to buy, because 5% weighting the SPX And if you're a hedge fund out there that doesn't have exposure to NVIDIA, then right now you're underperforming the S&P 500, which is kind of their mark that they track their performance off of. So that's why I think great numbers and a dip, you're going to see that dip be bought up. It probably wouldn't last for more than a week. But like I said, there could be a justifiable reason that it dips. I don't think there will be, but yeah, it's a name that's why I think that's best case scenario, because you're going to get a cheaper entry to trade a higher, well over 1,000 in the near future. But obviously, if you don't have exposure, you might end up chasing it higher over 1,000 tomorrow night. We'll see.
Mm-hmm.
But yeah, so that's kind of where we're at right now.
Sweet.
I would say definitely more bullish, of course. Last week, that indicator, we were the most overbought in a while, but that was Friday. We kind of peaked out Friday and consolidated a bit. Haven't really made any new legs higher, and makes sense too, since we're going to be waiting on the bellwether tomorrow.
Yeah, I kind of like to see that divergence mentioned in your tab, because I kind of short time frame. I don't look at RSI, but daily and weekly, especially for like some shared things I do. And I did notice that, big divergence there on the weekly on SPY. And so,
and that's something you just want to keep in the back pocket too.
Yeah, it's just a part of the trading plan. Like when you guys see this on Tillo, can't see it, but when you guys see what I'm showing here on the screen, like it doesn't mean just blindly be bearish and have all your portfolio in puts. It's just kind of like he mentioned, newsletter, or you can take it from here, Tilly, but just be aware of what it is, because it does play out. There's times where it doesn't, but there's times that it does play out. So just kind of something to be aware of,
Yeah, it's kind of, you just don't want to be blind to it. I mean, it's a weekly divergence. We've seen it before. We've seen it obviously play out, to the downside, but that also came usually during events, whether it was inflation ran up to 9%, the Fed started aggressively hiking rates, or during the pandemic was another time that we saw that. But right now, too, the strength we've been seeing, you don't want to see that, but at the same time, your advanced decline line is at all-time highs. Breadth is greatly expanding and improving off the lows that we saw a couple of weeks ago. That's all optimistic. Companies are earning. The Fed's probably next move is going to be a cut, not a hike. And growth just in general looks good. So, and that was a write-up too a few, maybe a couple of months ago. You want to see a market can sustain a higher multiple when the companies are growing. So you don't want to see these companies run up like it did earlier this year, where it's just a big rush to the register to buy because the Fed's going to cut rates. You want to see the companies actually earning. That's an authentic kind of reason to sustain these higher multiples. So we're getting that too. So that's a positive there. But like I said, you never know what can change. It's early in the year. Well, we're in Q2 now, but things could definitely change. The consumer makes up 60% of the economy. So if they all of a sudden cut back, that's obviously going to impact earnings. But at the same time, we just heard from Jamie Dimon last week, and he's the largest bank in America, like the fifth largest bank in the world. He has eyes on the consumer, and right now they're in good shape from his perspective. So
nice. Anybody in Zoom? Hopefully you're taking notes. Anybody have any questions for Tilio? I can relay them, or actually I have open mic permissions if you guys want to ask anything. Tilly, I don't know how much time you have, but does anybody have any questions you guys want to ask him? Silent so far. Economic stuff is a lot to take in, guys, so hopefully it's not too much over your guys' head, but
yeah, and it's obviously boring. I mean, most people probably get bored talking about that. They want to go in day to day and just kind of trade. But at the end of the day, if you want to catch that macro kind of trend, you got to know I would say, more authentic reasons why markets move the way they do and behave the way they do. Because you don't want to go in there. I mean, you can look at NVIDIA, for example. If you want to go in there day to day, scalp and day trade it, for the past year, you probably made a hell of a lot of money. But at the same time, that's a lot of work, probably a lot of stress, a lot of losses that you took too, depending on kind of how you position for it. But if you knew the story there, if you saw the numbers, earning after or quarter after quarter that they were putting up, you should generally, and that's what I've been saying too. Even though it's going to have its dips, obviously it's pullbacks. I don't see any reason to trade it to the downside. Let those moves happen. And if you see them as a buying opportunity, definitely buy it, whether that be, a couple weeks out call options, picking up more stock, whatever it may be. It's until that company stops earning, putting up the numbers that they've been putting up, to the margins that they have been, and eventually that'll come. But until the growth slows down, I mean, it like I said, they're kind of the bellwether right now for everything. If anyone's getting to the whole AI place, they're probably going to go through NVIDIA, and those GPUs aren't cheap. And like Jensen Wong said, his competitors right now, they could give their AI GPUs away for free, and they would still be too expensive. That just goes to show you the power, and the kind of hold that these NVIDIA GPUs have, on the overall market, and how kind of sophisticated they are. But yeah, as far as kind of the earnings go, the economics, you definitely want to kind of have some insight there, because it'll help you kind of not just anticipate some moves or the kind of moves that we can get based off of any data or whatever it may be that we get, but earnings are a perfect example. Where like NVIDIA last earnings, like I said, it dropped $75. There was no reason for it to drop $75. So that was a perfect buying opportunity, even if it was just for an after hours trade, drop maybe 5% just to run up 10% later, a few minutes later. So, and that's a quick little look going to the NVIDIA Investors Relations page, seeing the numbers they put up, looking at the estimates, kind of seeing as far as how much of a beat they were, and did it make sense that it dropped for you? And so that's exactly what I'll be doing this report, too, is waiting for that earnings snapshot to come out right at 4 to 4:15 p.m. And if it drops on great numbers, I'll be the first one to go in there with some more shares, more so just to trade. I don't want to really add to my core position at this point, but so.
Well, for us dummies in OOT, can you put it in the chat if there's a good report? Just let us know, drop some breadcrumbs, like if there's anything that shocked you in a good or bad way, because I'm sure people will be asking you.
I'll definitely say if I'm picking up more shares, whether it be for a trade, based off the move it gives. Of course, that'll only be if it's a downside move.
Right.
It's on a forward basis still 15% below its 5-year average. But of course, this could trade lower too, even on a great report. And that's a golden opportunity to me. But obviously you got to position appropriately, because you don't want to have money tied up that you can't have tied up. But I think right now, if you still got patience with NVIDIA, you're still going to be rewarded in the near future. And then you can just kind of wait and do what I do. And once I see the spread between the beat and raises kind of narrow, and that's when you can start to think, okay, maybe this current growth cycle is over. Or if we start to see reports out of, maybe AI or AMD is really kind of get more sophisticated with their chips. I think the M100 they are, or something like that. We're nowhere close to that right now, but until then, you really got to hang with NVIDIA, as far as in the semiconductor space. Obviously, if you have, you've been extremely rewarded.
Yep, just kind of follow the leader, ride the coattails, ride the wave, so to speak. And if you want to dip in some other areas or rotate out, like you said, just kind of wait for that moment or wait for it to make sense, kind of thing.
Yep.
Nice.
But hey, I just pulled in. If there's no questions, I'm gonna hop out here. I gotta get some sweat off of me.
Oh man, that's recorded in the chat. Thanks for that, Tilio. But appreciate you, brother. Appreciate the time. I'm sure everybody appreciates it. You got 30 people in here, just got a lot smarter. So thanks for taking time out of your night, man.
Yep. Y'all have a good night.
All right, later. All right, guys. Well, that was a nice little surprise. Man, how do I follow up that? Oh, empanada. Nice, brother. Feel free to jump in if you got anything. He Yeah, he laid out pretty nice, you guys. So I don't have a ton to add. I'm going to go through just the couple slides I do have just to kind of sum up what he was talking about, and things that kind of he mentioned. Mine is the way more dumbed down version, but obviously, um, like we kind of talked about, or like he talked about as well, like we want when the cuts happen, it's kind of that teeter totter effect of it's data on one side and rates on the other, and it's just kind of it's a balancing act. It's a dancing thing that they're doing, and so like I highlighted here, we want to see you know cuts because they achieve their 2% inflation or whatever it is. We don't want to see panic in the markets because of something with I have notes here somewhere. Um, yeah, we want the Fed to ease up on the rates because we have achieved their inflationary goal, not because the labor market is weakening or something like CPI like that. And so this is what we watch, guys. If we start getting data in that matches why we're dipping, those are where you can maybe position a little bit heavier, I'll say, on the downside. But just because we have a red day in the market, it's just people, we're all-time highs right now, guys. Like for somebody to make money, they literally have to take profit. And so we just make new all-time highs. Like there's going to be profit taking. So don't get blind on just the intraday chart of, oh man, we had a red day today. It's like zoom out and see where we're at. And so, when the data tells us that, hey, we can be more bearish, let's do so. But until then, rates are, like I said, or like we kind of showed here, there's no expected, and that's just an expected or assumption rate cut until about September. Okay, so between May through September, generally speaking, as long as data is good, when we get dips, like buy the dips because like on the chart, it may look like a bad day, but it's like we're down 0.5%. That's nothing overall, you guys. And so, stick with that mindset. Don't be overly bearish again, but always zoom out. I'm going to show you guys some charts in here in a second. Yeah, just to sum up, use the 4-hour daily, weekly, ride the wave, follow the market, don't fight the trend. I want to go quickly to Gail had a question. So Gail, your question, so when you buy SPY, you're buying an ETF, which is a basket of stocks. And in that basket, if don't put all your eggs in the basket, so to speak, these are the eggs in that basket of SPY. And so you can see the weight here, 5%, and the rest of the names in the AI sector. What Tilly was saying, if they have a good report, NVIDIA is going to follow Microsoft, Google, Meta, Amazon, AMD. They're all going to follow this good report and ride the wave, so to speak, in the coattails, and it's going to push SPY up. And same thing, if they say something in the report that kind of spooks the market, this is what is inside of SPY, the S&P 500 when you're buying that ETF. When all these are moving together, if they're all moving down, it's going to move SPY down. So hopefully that answers your question. So, if you're like, well, the S&P's moving up today. Well, if these top 10 are moving, that's going to carry the market either way, to answer your question. But we are running a little bit short, guys. So I want to get a couple things in. Taylor talked about the divergences to just kind of take note of. Again, it doesn't mean be a blind bear, but when we were making higher highs, generally speaking, the RSI, the strength index, you want to see that moving with it. And so if SPY is moving higher and making highs, this line up here, but the strength index is not. That's just something to kind of take note of, and it's something to show you guys here. I've said this before. When I like this a lot for share plays, just to kind of give you guys perspective. So when I see this is 2023, so this is July. This is the weekly chart. This is May-ish through October. So everybody remembers last year there was October lows, and then we didn't look back. On the weekly, so it's the weekly time frame, and we're making lower lows and our RSI is diverging and making higher highs. When we make that lower low or a double bottom-ish on the weekly, that is like one of my favorite setups to get into some share plays, because it's kind of just like buy the fear, hidden divergence kind of thing. It's like the RSI is rising, relative strength is rising, even though the price is falling. And so big divergences like this on the weekly can really pay off, you guys. And again, we see it back in 22, the end of 2022, price is rising, RSI is coming down. And so that's kind of a hidden divergence to play with, you guys. So, put that on the weekly chart and see if you can see that. But again, it doesn't just mean, I can probably find an example on the daily, I bet. It doesn't just mean blindly buy puts. It just means be aware of where we're at, what's happening, I guess you could say internally. So here would be a good example of buying just because, and you probably would have got, well, you definitely would have got smoked. So say you start seeing divergence here. This is the daily right now in SPY. So you're saying, oh man, the RSI is trickling down, SPY is going up. You try and load puts, puts. The whole way on this huge move, this, however big this move is here on the percent wise. So stick with, if you can, stick with it on the weekly. It's just something to watch, kind of neat to see, I guess you could say. But it's just kind of a nice point that he put that in the newsletter, because I do like to watch that mainly on the weekly. But it can be for any stock, you guys. If you're seeing a stock make lower lows and maybe it's lower volume and the RSI is rising, that might be a good dip to buy. But yeah, you guys, my game plan for SPY, if we push and we leg up, obviously we need to throw some fibs on. But for me, if we take a dip, I'm being selfish, I'm being greedy. I want us to be in dip mode this week because I want another buy-in. If you guys were in my lecture a couple weeks ago, I bought this dip down here into 500 and I rode this to 512 on some shares. Obviously, I didn't catch everything. I should have trailing stopped. But if NVIDIA does drag the market and chips in general, this all-time high, you guys see I have an alert just sitting here, 524.47, 524.48-ish. This zone here, this previous all-time high into this 9 daily moving average, this for me would be a dip to buy with confidence, and I will for sure scale in some things. So again, kind of piggybacking on what Gail said earlier in the chat, if SPY dips to here, to this zone here, or if this 20, it's the 20 moving average, kind of comes in this 520 area, and I look at some other things like AMD, Amazon, and those dips also align with some key areas. Like I'm gonna, like kind of Tilio mentioned, like I'm gonna buy the dip on some stuff because I'm not gonna load the boat on puts at a big support here. I'm not gonna do it. I don't think you guys should either. It is a bull market, whether you like it or not, whether what you want to believe Twitter says. And so some dips to buy here, definitely for sure. I want to look at, go over a couple names since that was pretty data heavy for that first half, you guys, but I'm going to go over some big tech stuff here. And I think Flips he hit Tesla, didn't he? Someone let me know in the chat. I've seen Tesla. 1 hour chart here, guys. Tesla I still like for continuation. Obviously, this big breakout here. But again, when we come out of this breakout here, this is the 1 hour chart, you guys, is Tesla. We kind of see where the crosshairs are. We pushed up and look kind of where we're settling here is kind of this pocket here. And so, with this big breakout, I think confidently you can buy some Tesla dips into here. Obviously, this is a wide zone here. This is like a $3 range, but I just want to kind of show you for perspective. When we push up and we're kind of settling out here on top of this little pocket here. So if we push up and open kind of into this zone here, this 181, 182, like I think those are dips to buy, because if you look here, we have support here. Okay, we broke out well over the 20 and the 9 moving average. Yeah, that was a good one. Empanada, did you take anything, or is anything you're watching, man? Want to help me chart a little bit last 10 minutes? Go ahead and unmute your mic if you got anything on watch, brother.
Hey, how are you? How's everything?
Good, man. Good, man.
Great lecture on the company of Tilio and all the information that he gave.
Man, yeah, he's a wealth of knowledge, man. It's crazy.
I like the macroeconomic side that he brings. Like, he's not, one of the things that we have to take into consideration sometimes is that we're watching all the time single names, but having a little knowledge of everything and why things are happening, it's great for the investing part. So yeah, it's awesome. Um, on your side, this morning we got Flip's got he called Tesla had open, and it was huge, and then it went from I think his first two profit targets, and then that thing just kept on going and going and going. So he
He was the
wasn't.
winner of the day for sure, man.
Yeah, that was awesome. I missed getting into Apple. Apple, I had it charted. I was paying attention to it, and
Uh,
I, I got lost thinking about the banks. I did a little bit of revenge trading on the bank, and it actually went my way, but a lot later
mhm.
on JPM. I was looking JPM after what happened, and knowing that the CEO is just stepping down like 5 years from now, that thing was going to bounce. But and that's kind of the things that I was looking for. I said, why such a huge flush happen? It was nothing more like a little scare on the market and a little exaggeration on the volatility, and
Mhm.
that will be a trade that I will try to buy back on the bounce for sure, and I will put a stop loss just in case.
Yeah, they see the headline of he's stepping down, but like you said, the end of the headline is in 5 years, and so
But the amount, like the percentage that it went down, it's just ridiculous. So if you
JPM,
see
right?
JPM, yeah, look at that.
Oh wow. That was yesterday. Dang.
Yeah.
But look, I
Uh,
mean, okay, so not to cut you off, fear, 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 fear. This, if you guys don't know, this is the 20 moving average. So, I mean, on the daily, this is a multi-time frame moving average. This is the 20 moving average on the daily chart. So if I go the
yeah.
daily,
Yep.
um,
And that's what I call
look
it.
look
Like
where it
I
sold, you
have
guys. So
ups
remember
down
that spy
entries.
chart, buying the fear, like man, like that is a dip. Like you buy at these key moving averages, and if we open under it, it's a quick cut. It's a loser. It's a losing trade, but it's like that is the fear to me. That is the fear you buy, man. If you would have bought that, or even, I guess it even probably opened right there this morning. I mean, I don't know that 5 minute candle exactly, but yeah, that was I guess, yeah, you didn't quite get the 20 on the opening, but um, man, that would have been a good fear to buy dip for sure, you guys. I see a couple things in chat. We're running late, so Meta, Adam, are you in or just eyeing it? You want some perspective? Let me know, brother. Let's see here. Sorry, guys. Only a few weeks on Thinkorswim. I'm really slow, but hey, it's a learning curve. Immediately
You
with
know,
Meta, I see this downtrend that is going to be decided. If you ask me, it's going to be decided this week, maybe even tomorrow. So we're squeezing, not squeezing like a squeeze, but we're pushing down, selling pressure down to the 20 moving average again. And just draw a line. And like I always say, look left. Let's just see where this correlates out without even looking, see how it lines up. So we have a downtrend, but look at you guys. We have this push up, what I always call a pivot. We push, we bounce, we ride, we come down, we bounce, we ride up. So tomorrow, Meta, I think, is definitely one to watch for sure. 461.50 ish. We sell under that, and you got to start thinking, okay, overall market, it could be a weak name in general. Like today, I hit Delta Airlines. It was just a weak name in a strong market. So tomorrow, Meta's kind of the deciding factor. It may chop around here, waiting on Nvidia, but if we sell under that 20, you guys, you can see Tuesday. This is like what, 2 weeks worth of data here. So we sell under this. I'm not saying being mega bear, but we can definitely, kind of do one of these things on Meta, leg down. But if we bounce and hold, I don't want to be bearish down here or around here until that 461.5-ish breaks. Viral pivot is just kind of a name I use. Like I tell myself you guys always hear me say in lectures or on chat, it's like follow the wave, follow the momentum. It's like, I don't play Meta a lot. Like right now, I literally just have one line on the chart, and I marked it here according to the 20. and we looked left and we seen how it correlates. So for me, when I say pivot, it's like when we're above a key area, you know, play the bounces, play the pushes. And when we're under, that's where you hear me say, say the market takes a dip, what's today, Tuesday, Wednesday, Thursday, Friday. So if we're selling under here, I'm looking to short the pops because we're under a key zone here of, it's not just, oh, we sold under here. To me, I'm literally looking at all this info from the last 2 weeks, all this volume here from the last 2 weeks. And if we zoom out more, it's like, okay, now look left. Now was that the ER gap? Yeah, it was. And so, we're kind of in the middle of this gap, or did it get filled? We're in the middle of the zone here. And so you got to think, okay, we held this for 2 weeks. Bulls were in control. They pushed up and now they're somewhat failing, and now if we sell here, it's like, you got to say, okay, the last 2 weeks they held it and now they're not. And is the market getting weak? Is the overall market getting weaker? Or is it just meta weak? And so that's why if we see here in the selling pressure matches and maybe the overall market matches, I'm looking for a sell on, oops. Done screwed it up. Oh shit, look at this. All right. Sorry guys. I'm looking to sell down here and short the pops, meaning sell down, push up, because this was support for 2 weeks and now support becomes resistance possibly. So that's a good low risk trade. If we sell under, $1.50 and we push up here and it's a weak push and the rest of tech is weak, like that's a good short position. And you continue, use this trend line overhead as well. And you can just extend out as far as it takes. Say we sell down here, we come down here, we extend this trend line, and then now meta's down here. It's like, now you can short this pop into this trend line. And you keep riding the trend. This is a 1 hour chart, you guys. You ride the trend until it tells you you're wrong. Or say we sell down, we push up here, you try and take puts and we reclaim it. So, okay. I remember last night, 1K said lectures, the 20 moving average, it reclaimed it. You start looking cautiously bullish again on that trade. Looks like a failed breakout and hold the uptrend. Yes. All right. AMD, what do we got? Similar setup, you guys. It's probably very similar in a lot of names in the market, but probably got a small, let's see. It's either I draw this on top or I ignore that big hourly candle up here and kind of draw this. I think for now I want to go this because for me, I don't say I want to ignore it, but I want to go where the most touches are. AMD, I think tomorrow, possibly not the best play. It probably hands off. Well, it's not going to sit here, so it's got to do something. So AMD is going to hold this trend. It might be choppy because we have NVIDIA after the bell, or it may small gap down, and this trend down can continue. And so you want to start looking for 162 zone, 163 to take profit, depending on where it's at. Netflix, man, that thing boomed, right? Oh yeah, it did. Dang. Netflix, let's zoom out for a second. Consolidation. The 9 moving average catches up. Remember, this is the daily moving average, the 9 MA. Sold here, fear. People probably swung puts at a big ass support. I can draw one line here. It's kind of nice and thinkorswim. I don't have anything drawn yet, so we do this. People probably swung puts there on something that bounced 1, 2, sold but reclaimed 3, 4, 5, 6, 7 days in a row. Some poor soul swung puts there. You don't swing puts on support, guys, after 7-day bounces. Yeah, we're not breaking higher. This is a consolidation area, and we close right at the 9 and look at that breakout. These are the swings that people dream of, that you talk about, maybe people catch, but always zoom out, you guys. To backtracking some of my other lectures is before you enter a trade, you need to know where you're at. You can't just swing puts on this close. Yeah, that it was maybe an ugly day on Thursday last week, but it's like, look where that is, you guys. Like, those are the trades you want to take. Impanal, you got anything for Netflix? A new entry, or what do you got, man?
Nope. I got in when MMA call it, and I'm
Called it.
still riding it. So I
Nice.
I bought 4 calls for June, and I've been just trimming, and that's it. Those are the plays that I try to do longer term, and I didn't call it on my top since it was very expensive. The shares were kind of the contracts were expensive, but that's a little bit on the subject of leaps that we were talking yesterday on my lecture. That's the beauty of I don't have 100 the amount of money in cash right now to buy 100 shares of Netflix, but I couldn't buy 4 contracts for 6 to 6 I don't know 5 months, and then profit out of the move and then build up your port that way.
Yep. Did you
So,
trim anything at 640-ish zone? That would have been
yeah,
yesterday. Yeah.
yeah, I trimmed yesterday, and I'm still on them today, and I think that I'm gonna keep holding that until next week. So
I
it's
mean,
been
yeah, you guys like if you guys look at the chart or new or not new, it's like that first line I drew here. Now that I zoomed out the 4 hour, it's like look at that support zone, bounce, 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 bounce. Sold under, obviously that was probably was that earnings, maybe, yeah. But now look again, we're back over this channel, this consolidation, this long-term zone from March. It's like, man, it's on. Like he has to trailing stop it now, maybe let the 9 catch up. Hopefully it keep pushes and this 9 catches up here. And that's kind of like a double support. You got all this support 640, your 9 MA catches up, like that's a good trade.
yeah,
Amazon.
that's a pretty nice one.
Let's see. This was charted eventually. Amazon had a weak day. Nando swung some puts, and that thing paid.
Yeah, Nando called it 2 days ago on puts, or I think even from last week.
So this is a good learning example. I'm on the 4. I'm gonna go down the 1 hour because that's my bread and butter. We got this downtrend here. Today's Tuesday. His alert was sometime yesterday. No, Friday.
I think it was last week.
Yeah, Friday he alerted. So he alerted somewhere
Yeah,
in the zone here, and everyone probably freaked out yesterday.
yeah,
But if you look
because it
again, you
was going
guys, the
up.
9 moving average rejected perfectly. So again, use that larger time frame confirmation. Like if I'm not gonna lie. Like say he, I have no idea where he entered. Say he entered down here, and you open, and you see that. Like that's mentally and emotionally hard on the portfolio to see that. But if you have time, I think he got a June contract. This is where and Tilios tab too, man, or on his Tilios comments on Trade Floor I've seen all week. He alerted that pins, and he said, I'm going to make a decision after the first 30-minute open. He wants to see the volatility simmer down a little bit. So, talking about this trade, yeah, you guys probably opened red yesterday on Amazon, but it's like it rejected damn near perfect the overhead 9 daily moving average. Okay. That was yesterday. And what do? We sold down the 20. Obviously, if you didn't take profits, that's risky to hold puts, but obviously in hindsight, it paid off. But again, you guys always zoom out to know where you're at because, it comes down to entry and it comes down to, your risk tolerance. It's like, yeah, you can hold through this, but we start breaking over this 9 and it's like this downtrend is probably confirmed breakout to the upside. But now the Amazon is a little bit weak today. Got to start looking left, see where did we stop? Why did we stop? For me, I'm going to grab these wicks right here, this quick one, and just kind of see where it correlates. Looking left. Tricky spot, Rena. Some support. We got a downtrend. Yeah, isn't that funny how the markets work, you guys? Like a lot of these setups look the same and they're kind of hinged on NVIDIA. And so if NVIDIA reports bad, everyone's going to take this play, be like, oh, see, I told you so. Or if they break out, so it's like, oh, I knew the breakout was coming. So, these algos, they're not dumb, you guys. They're setting up. It's big money positioning both ways. But yeah, that's 160 or 182.6, 182.7-ish zone. Sell down through that, and you got to be thinking that 180, 181, that low of the day today, might revisit that. Yeah, All right, guys. It's after 6 my time. If anybody doesn't have any questions, I'm running a little bit late. If anybody wants a few charting, a couple more things, I can. But if not, I want to make sure I didn't miss anything. Netflix, Amazon. I think that's all we got, you guys. But have a great week, you guys. Again, oh, one last thing before people are dipping, no one leave yet. My one last disclaimer: if you want to play NVIDIA, because you absolutely have to play NVIDIA. If you want a cheap play, you guys, you should play SOXL. It's an ETF that holds all the semiconductors. It holds NVIDIA, it holds AMD. It's not financial advice. I'm not going to tell you what to play. But SOXL, it's trading at 40 something bucks. You can buy an at the money call or put, whatever your bias is. It's going to be pretty cheap for you versus buying NVIDIA 1500 call that expires in 2 days. And the IV is huge on it. So NVIDIA, 115% IV. NVIDIA, pick your contract. You want to add the money NVIDIA, it's going to cost you $4,000, $4,000. And if it dies, you lost $4,000. SOXL, IV's jacked as well because of it, but you can buy a reasonable strike, a couple bucks out of the money, and it's going to cost you 200, $1.25, whatever it is. And so if you guys must play, SOXL, Viral says FTXL. Nice. Let's check the liquidity. Oh, market's closed. I don't like, might be because the markets are closed, Viral, but I don't like the spreads on this. That's a big spread that can hurt somebody. Not that I'm calling you out. Let me see if it's just because the markets are closed. Spreads are a little tighter on this one, brother. SOXL, $8 spread. You can get a mid +1, mid -1. FTXL, let me look again. This, you just got to be careful, you guys, because again, these spreads can tighten up tomorrow when the market's open. But if you mark it in and you buy at 370 and you mark it out, say you just bought, by accident, you're taking 165. Is that right? Is that $1.65 spread? That's a big spread, you guys. If you mark it in and out of this, like this hurts you guys. If you're not getting mid fills. So always watch the spread on stuff. And that can be with anything. Anything you take, if you guys trade those shit stocks that have really, really bad liquidity, watch out for that. Monday, spread was close. Yep, good, Viral. Yep, definitely. If it's close, nothing wrong with that. Norvin, VRT. 105. What expiration you got, brother? Are you in profits or did you get in today? What do you got? Right here on the 9. I don't hate it. You guys know me. I don't hate that. Strain right there. Is this all-time high? I never play this. Oh yeah. Vert is vertical. Is that its name? Because it looks vertical. Damn. But can't complain with that, man. Trading right around that 98. Just call it 98 for quick reference. Gotta buy dips around there, man. Ladies and gents, not men, but ladies and gents. All right, last one. Cake. What the hell is that? Cheesecake. What? Cheesecake. Oh man. Smiley face. The indicator. Really quick, just for you, and then I'll get to cake. Under, yeah, all right. Under Think or Swim scripts, I pinned it and I tagged a couple other people. I'm not good at this, but if you talk to me in real time tomorrow about it, we can go over how to add this. I can show you how to add this. But I found this script on YouTube. It was for share plays, but I changed it, I guess, quickly. So over here, you got a watch list. Was it smiley face? At a watch list, and then you click on this gear here, you go to customize, you type in custom, and then you find one of these that are not used. I can go this tomorrow. I just don't want to take up too people's time. You go on custom, and that's what these are. You click it and you add it and you copy paste. But then once it's in here, you basically make 4 duplicates, and then you click on this little thing here, and this is where you change this here. So I can help you with this tomorrow. This is where you change it 1530, whatever. And so this isn't like a secret algo, guys. This is basically, if you've seen my charts, I trade on the 9 and the 21 EMA, exponential moving average. And this just tells me, or this gives me an insight. So I don't have to spend so much time from the charts, you guys. This tells me, okay, Apple on the 1 hour, the 9 EMA is over the 21. On the 30-minute, the 9 EMA is over the 21. So generally speaking, this is a bullish trending stock, you could say. Something like Meta, of course, what we talked about. Look at Meta. Meta is bearish on the 1 hour, on the 30-minute, the 15, meaning the 9 moving average. I only have the 9 on here right now, but the 9 is below the 21 EMA. So, and then intraday, you guys. So intraday crossovers, you know, people say, hey, I want the 9 to get over the 21 on a push. And so this is just an indicator to help me along the way. It's not an auto trader. It's not anything secret. It's literally just help me with time from the markets. Cake. Who was this? Flushing viral cake. Man, does that have good liquidity, brother? Cake. So we're under the 9. Obviously, quick look. You know me, my trend lines. I'm going to think this trend's down here to this 20 until proven otherwise. Until back over 38. Even better, back over. Just call it 39. I would be somewhat confident. You know, staying bearish on it, maybe not. Let's see. Put my foot in my mouth there. Coming into this zone here, this pocket. That 37 to 38. If you're in profits on puts, great, but I would be starting to get a little bit cautious here. We got that zone. I call it a pivot. Call it what you want. We pushed up. We're coming in that zone here, and so that, I think, first touch here, I think we're gonna get bouncy here. 37.3 to, we're kind of closed right at it. Like, that's a big spot there. So take puts into it. I don't know if I would love a brand new position on it. We could settle down here. You let that 20 catch up. That could be a good bounce play, possibly. I'm in puts, added at 40. Love it on that flush. Nice. Definitely nice 3-day continuation for sure. If you haven't already, check out that level there. Nice. All right, running late. JD, last one. Fernando. For Nando, not Fernando. Nando, for you, Nando. Start on the 4 hour, never have it charted. I see a possible trend. So I'm going to tag this wick here, this zone here, this close, this wick, this wick. We're going to open probably right at the trend. Let's zoom in. 9 moving average overhead rejection. What are you in, Nando? Let me, what was your, is it on your tab? Is it a call out?
I'm short on China names right now.
Short on China. All right. Well, we got the 9 overhead. Obviously, you guys know that's a repeat thing for me. We got this trend. I know I'm skipping these wicks right here. I'm just looking for more body candle touches. Yeah, tomorrow might be deciding day, brother. Ideally, you want the, you know, my perspective, you want the 9 overhead to keep rejecting, or a round number, you want to stay under 34, and then we want to kill this trend, man. For if you guys are in puts, we want to get paid on that. Be looking,
You know, To be honest, I wanted to enter this on the loss of 35. That's where I had my first alert, my trigger alert. And just because I had other positions open, I didn't enter this one. I wanted to close those first. But in my eyes, the only concerning part is that I am chasing here, right? We were going down like a good $3,
Hmm.
almost $4 from that recent swing high, I would say.
Hmm.
And usually I'm in early, but seems like tomorrow is definitely that deciding day. And once again, I definitely think Bears will get paid here.
Yeah, and if I were to like just hypothetically extend the 20 moving average, it's like, an ideal world tomorrow they fake pop it to 34, no one panics. We sell, we crack this trend line, and then it's your trade, but for me, got to be looking at 33, take some profit, 32.6, this little pocket here. And then ultimately, if this 20, catches up and trends, which would make this trend line, I'd be selling. Yeah, there's three good profit. 33, 33.6, and then for me, if it's my trade, 32.2, 32 flat would pretty much line up with this 20 here in an ideal world. But obviously you want to get that trend line breaking first. Hopefully we can get it. I don't play the China names. I know you guys do, but yeah, man, hopefully you guys bank on that. But
Yeah, I had fun with these because they respect like patterns and stuff, very often, like, losses of trend lines, higher lows, lower highs. Just based on that, you can pretty much, find your entry, and it's gone very well for me. So, on this one, once again, I'll repeat, I am chasing a bit here. Usually I am a lot more. I would be on the loss of 35. So we would have gotten paid today, and I probably would have closed my position. But I think we see another gap down in the next few days,
mhm,
and I'll be hoping for that. Although
nice.
we don't trade off hope, but all right, we always got to have some hope.
For sure, for sure. All right, ladies and gents, we're running over. People got families, people got dinner, we got everything. But appreciate you guys stopping by. Tilio, Empanada, Nando, all you guys' questions, appreciate it. DMs are always open. Send them if you got them. But again, please do not trade NVIDIA contracts. Please, we want to see you succeed, not blow your port. Play the cheapies or play the aftermath the next day, you guys. But let's close out this week great, you guys. All right. Have a great one.